Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis and insights. Today is October 23rd, 2024, and we're diving into the latest earnings report from General Dynamics, a leading global aerospace and defense company. Joining us is John, our Senior Analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss General Dynamics' performance, especially given their significant role in the aerospace and defense sectors.
Absolutely. General Dynamics has just released their third quarter 2024 financial results. Let's break down the numbers and see how the company is performing. Revenue and profitability overview. Let's start with the top line. General Dynamics reported a revenue of $11.7 billion for the third quarter of 2024, which is a 10.4% increase from the same quarter last year. John, what are your thoughts on this growth?
It's quite impressive. The revenue growth is driven by strong demand across their portfolio, particularly in the aerospace and marine systems segments. This increase reflects the company's ability to capitalize on market opportunities and deliver on its contracts effectively.
In terms of profitability, the company reported operating earnings of $1.2 billion, up 11.7% from the previous year, and a diluted EPS of $3.35, which is a 10.2% increase. How does this reflect on their operational efficiency?
The growth in operating earnings and EPS indicates that General Dynamics is not only increasing its sales, but also managing its costs effectively. The operating margin expanded by 10 basis points to 10.1%, showcasing their ability to enhance profitability through operational efficiencies.
Segment performance and strategic initiatives. John, let's delve into the segment performance. The aerospace segment reported a revenue of $2.48 billion, a 22.1% increase. What factors contributed to this growth?
The aerospace segment's growth is largely attributed to the delivery of 28 Gulfstream aircraft, including the new G700s. This segment continues to benefit from strong demand for business jets, which is a positive sign for future growth.
Marine Systems also showed robust performance with a revenue of $3.6 billion, up 19.9%. What are the key drivers here?
Marine Systems benefited from significant contract awards, including those for the construction of fleet replenishment oilers and submarines. These contracts not only boost current revenue, but also secure future business, enhancing the segment's long-term outlook.
And how about the combat systems and technology segments?
Combat Systems saw a slight decline in revenue, but it remains strong with significant orders for munitions and ordnance. Technologies, on the other hand, experienced a modest growth of 2%, supported by key contracts in classified and space development projects.
Cash flow and capital deployment. Moving on to cash flow and capital deployment, General Dynamics reported net cash from operating activities of $1.4 billion, which is 152% of net earnings. How does this reflect on their financial health?
This strong cash flow generation indicates a healthy financial position, allowing the company to fund its operations, pay dividends, and repurchase shares. Ending the quarter with $2.1 billion in cash and equivalents provides them with flexibility for future investments and strategic initiatives.
They paid $390 million in dividends and repurchased $44 million worth of shares. What does this say about their capital allocation strategy?
It shows a balanced approach to capital allocation, rewarding shareholders through dividends and buybacks while maintaining sufficient liquidity to invest in growth opportunities. This strategy is likely to enhance shareholder value over the long term.
Orders, backlog, and future outlook. Let's talk about orders and backlog. The company reported a book-to-bill ratio of 1.1 to 1 and a backlog of $92.6 billion. How does this position them for future growth?
The positive book-to-bill ratio indicates that General Dynamics is securing more orders than it is delivering, which is a strong indicator of future revenue growth. The substantial backlog provides visibility and stability, ensuring a steady stream of work in the coming years.
The estimated total contract value stands at $137.6 billion. What does this mean for their long-term prospects?
This large contract value underscores the company's robust pipeline and potential for sustained growth. It reflects their ability to win significant contracts across various segments, which will drive revenue and earnings in the future.
CEO Phoebe Novakovic mentioned strong demand across the portfolio. How does this align with their strategic outlook?
The CEO's statement aligns with the company's performance and strategic initiatives. The strong demand across their diverse portfolio positions them well to capitalize on market opportunities and continue their growth trajectory.
Key takeaways. In summary, General Dynamics has delivered a strong third-quarter performance with significant revenue and earnings growth, a robust backlog, and healthy cash flow. John, what are your final thoughts on their investment prospects?
General Dynamics is well positioned for continued growth, supported by strong demand, a solid backlog, and effective capital deployment. Investors should find their strategic positioning and financial health encouraging for long-term value creation.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on General Dynamics performance in the comments below. Until next time.